Let's go back now to the volatility on the markets as we watch for more developments in the Trump trade war. Joining me now is John Klotz, financial planner with the Investment Planning Council. And John, thanks very much for joining us.
Good morning, Roger. Thanks for having me on your show. Welcome to the stock market roller coaster.
Holy cow. I mean, it looked like it was, we saw it pick up, then it dropped down again, and then the markets, at least TSX, I think, was up yesterday. It's a madness.
Yeah, well, it's true. As of April, right, Trump declared Liberation Day, and it resulted in tariffs and significant market volatility. So, what's going on, right? And what can Canadians do about it? The U.S. tariffs came in, and they resulted in stock market volatility and with 10% tariffs on most countries and others with higher tariffs. And the TSX was not immune, as you can see. Mm-hmm. And, we've had a deterioration of U.S.-Canadian trade relations with the 25% tariff on the auto sector and aluminum. And this is obviously resulting in less competitiveness in the auto sector and potentially job losses, as we're seeing. And I guess further abroad, right, you're seeing with China and the U.S., the U.S. put 145% tariff on their goods, and China has retaliated with 125% on the U.S. goods, and it's created some global uncertainty, and this is kind of what we're seeing in the marketplace.
And what can Canadians do with this? I mean, I know a lot of people probably aren't looking at their retirement plans or anything right now, but what do you do in this situation?
Great question, because, okay, so firstly, don't panic. Stay the course. Have you looked at an index report over the past 75 years? Because basically what it is, it's following the U.S. and Canadian stock markets. And effectively, it is a straight line upwards, averaging about 12%. And there have been lots of miserable events that have taken place over the years. If you think about it, for the past 75 years, the Korean War, Cuban Missile Crisis, Kennedy, the 1987 market meltdown, 9/11, credit crunch, COVID. And what happens is the market initially goes down, and then it always recovers and goes higher. So stay the course. As well, I think another thing is to consider is diversification. It's really important to be diversified right now because some market sectors will be hit more significantly than others. Others will actually be positively impacted, and it can reduce some of your risk. And I also think you can focus on quality companies. Good economy, bad economy, there are companies that are profitable and sustainable, and they have good fundamentals, and they will be around when the market does recover. Okay. As well, risk. This is a great one because a lot of people are very comfortable with risk as long as their investments continue to go up. So it's a good time to look at your risk and see if you're still comfortable with all the volatility and perhaps knock yourself down if you're not. Another things are rebalancing your portfolio, great strategy that can actually be done institutionally. There's some institutions that will actually automatically rebalance your portfolio. As one sector gets overheated, it'll take investments off and put it into another market sector. Okay. So these are things you can do. Holding a cash reserve, it's a great idea. The idea of holding some cash instead of having to sell your investments all at once. Another great strategy for Canadians would be like dollar cost averaging. Instead of investing a one time with a lump sum, do it over a 12-month period and stagger it out and reduce your risk. These are just some great things to consider as you're approaching your investments and not having to panic and just to stay the course and be informed and not have to do knee-jerk reactions.
All right, John, we appreciate that. We're out of time, but some great advice and lots to think about. Thanks for joining us.